a solid rally Wednesday with the S&P 500 up more than 2%. Zoom video communication stock up 9%. Let's take a look at the prospects for Zoom and other video conferencing stay-at-home stocks. For that, let's go out to California, where we're joined via Skype by Ross Gerber. He's CEO of Gerber Kawasaki. Welcome, Ross. Ooh, by the way, cool digs there. I like that poster.
Yeah, it's Keith Richards.
Is it? Ah, the Rolling Stones. Well, anyway, Ross, before we get to stay at home, taking a look at today's market, would you encourage investors to start getting in now and buy stocks as opposed to waiting until the start of earnings season next week in the hopes that companies will come out with dismal, disappointing earnings and drive stocks lower?
Well, I don't think earnings season is going to be as dismal as people think, because I think Q1, especially January, February, was super strong for most companies until coronavirus hit. We saw some supply chain disruptions, but I don't think Q1's the issue at all. I think it's what the companies are going to be saying about Q2 that's going to scare people. So that being said, we're in a bear market. I don't think it's the time to be aggressive. I think it's the time to be conservative. We've been buying stocks and a lot of bonds, actually, especially distressed corporate debt. Amazing opportunities. Was just out in the bond market now buying bonds for clients because the yields are so high relative to what you can get for what looks like will be quite some time into the future. So we're, I would say, optimistic, but we're still in a bear market, so we're playing it very safe.
Well, Ross, Zoom stock is in the news. It's rising even though it's slapped with a class action lawsuit over privacy and security flaws. Do you recommend Zoom and other video conferencing stocks given this stay-at-home environment that we're in now?
Yeah, it's funny you said that because I had to get my camera back from my kids. They were using it on their computer to do Zoom school now. So, you know, I've seen an amazing shift in behavior, not only from workplace, but from the education side of the business and also from the social media. So last night I had another drinking night out with my friends on Zoom, and we all get our scotches and we drink. And I'm sure people are doing this all over, from grandmothers playing bridge. So Zoom to me is like the new Facebook. And if you look at the basic square that they have and you extrapolate out all the things they can add to this square, like advertising, music, clips.
Well, Ross, there are other stocks, video conferencing stocks other than Zoom. For example, we've got Cisco Systems putting out WebEx, Teams put out by Microsoft, and there's that IPO of last year, Slack. Would you recommend any of these stocks, say, over Zoom, given their price levels?
We bought Slack as well, and here, you know, I think we use both at my company, so we're very familiar with the products, Slack and Zoom. If it weren't for these two products, I can't tell you what a different position my company would be in today versus where we were a month ago. Thanks to these products, we have not missed a beat at my company, not a beat. It has been amazing. So we see this being implemented across the entire corporate America, implementing these type of basically remote, internet-based, cloud-based business enterprise computing.
And lastly, Ross, we don't have much time here, but when it comes to stay-at-home stocks, there are also entertainment stocks, which I know you really track closely, such as streaming stocks or video game stocks. What are the prospects for those? Are any of them trading at values that you think are worth picking up right now?
Well, yeah. I mean, we think EA and Activision are bargains. Take-Two is not as much of a bargain, but the video game business has never had it so good as they have it right now. It's a dream come true. The products are great. The interactivity, the social media aspect of it have been huge. And Activision being the stock we like the most right now because Call of Duty Warzone is a phenomenal game. Everybody's playing it. But we also like streamers. I added back to my Netflix position. You know, this is like Netflix's dream come true, you know, that they're not spending money on production right now because they're shut down. So the spending side, but the subscriber growth has got to be amazing. And the amount of people watching Netflix for how many hours has got to be a record for them for sure. So we added more Netflix again, and thank God for Disney Plus, or else Disney would be in real trouble. But Hulu's doing really well. Disney Plus is doing well. I think Disney's a value in here, as well as, you know, I just think YouTube's doing phenomenally well for Google. So when you think about the networks, streaming games, streaming video, and then workplace productivity, you've got a whole new set of investments that I think look very attractive over the next couple of years.
And Ross, I guess given the opportunity that you see in this bear market, I assume you're satisfied with how things are going. Brings to mind Satisfaction by Mick Jagger and the Rolling Stones, right in the
Yeah.
background. All right. Well, thanks a lot, Ross.
Thanks, Fred. Stay safe.
You too. Ross Gerber of Gerber Kawasaki coming to us from California via Skype. I'm Fred Katayama, and this is Reuters.